local holdings, your domestic holdings already truly well represented. So let me just share a little bit for your benefit. So we have 4 portfolios, different risk levels from balanced to high risk. You can see that they are all made up of 5 different ETFs representing different asset classes. And those asset classes are US equities, Sukuk, gold, and emerging markets. All these ETFs are Shariah compliant, and we have a Shariah advisor to also sahkan these portfolios. Over the last 5 years, you can see the back-tested returns have been fantastic, and last 5 years also includes 2022, so I'm not really cherry-picking here. The last 5 years, we've done between 7 to 14%. So when we created these portfolios, knowing full well how amazing ASB can perform, up to 6%, we kind of went up the risk curve a little bit so that we could deliver over 5 to 6%. Yeah, so that's why you can see the way they are. And also we wanted to make them truly global and not just focus on domestic offerings, of which there are many. We didn't want to just say, here's another Me Too kind of fund. All these 4 portfolios are managed by our system called ERA. ERA is Economic Regime-Based Asset Allocation. Long story short, we change your asset allocation according to where we are in the economic cycle. If we go, let's say, from a recession to good times, the portfolio changes automatically for you. Our other portfolios already use this system. We wanted to make sure that our Shariah Global portfolios also was managed using this system. So you don't miss out in terms of the way it is managed, and we're quite proud of it. Right now we are in stagflation. If, for example, we move to good times or recession, the asset allocation automatically changes. So with StashAway, you can invest in a portfolio like this and not have to switch around from bond fund to equities to right? So you can just stay in one fund. So this is how it has performed. The numbers, as a marketing guy, I put the big numbers there for you to see. But I wanted to focus on 2022. I think we all know how bad that year was. And even though these funds are exposed to global markets, you can see that they held up quite well in those times. And that resilience is important because you are long-term investors, and ultimately you also want that wealth preservation in effect. And as the title suggested, I also wanted to show you how you too could build a Million-Ringgit portfolio using both ASB and StashAway. And I'm talking about ASB as a product that people can access for their everyday use. I'm not saying that ASNB or PNB endorses this approach as such, but I'm saying that it can be used in conjunction with our product in your portfolio. So we start first with a contribution of 60,000 a year. Say I see what I did there, right? You can build a $1 million portfolio by contributing your own money, right? Like that's the way, that's a reality of it. There's no easy way out. So an assumption here is that you contribute 60,000 a year. So that's 5,000 each month. So it's a concerted effort. I'm not saying it's easy, but you need to start somewhere. So you start with 60K a year. The allocation is 50-50. There's no financing in this case. It's all cash. 30K to ASB, 30K to one of our portfolios. And we are assuming that ASB will return something around 5.5 on average, and Shariah Global portfolios will return somewhere around 10% on average. Obviously, it comes with volatility. There's a chance of losing your money and some of your principal. But as you saw from our back-tested returns of 7 to 13%, I just took the midpoint. Charting this out, it takes 11 years to reach to 1 million. You will see that the ASB with much more consistent and stable and positive returns is very stable. And StashAway portfolios, I wanted to show more volatility, right? This one is, the jagged lines are just there for illustrative purpose to show that it's not a straight line, but with more risk, you should also expect more returns. So at the end of year 11, you would have over 1 million in terms of portfolio holdings, and that is based off of 660K of your own capital and 400 plus K in terms of investments. To invest, you need three things. You need capital, returns, and time. Returns sama dengan risk lah, is the same thing. So you need those three things. So that's why I wanted to show you that the capital you need to reach something like this is 660. You need 11 years, and the returns 5% here, sorry, 5.5% here, and 10% there. Okay. I also charted out ASB financing. By the way, these pictures I use Nano Banana, so very cute, right? Both of them talking about ASB financing. So obviously, with more capital, you reach there faster, right? This is not magic here, but the assumption is that you get 30K in financing a year for 10 years, and you contribute 60K of your own money, because just now 60K, 30, but now with financing, you can put more towards StashAway, and then the 30K here for ASB financing naturally goes to ASB. The returns assumption is still the same, and it takes 8 years to reach that 1 million portfolio. So just to also clarify, there is the financing cost, and your 60K principal or your modal is used to pay off the financing. So whatever is left gets put into the StashAway portfolio lah. And naturally, it'll take faster. It'll take 8 years actually to reach 1 million. But at the end of year 10, you would be looking at 1.35. So again, time, capital, and returns. Time, looking at 10 years here. Capital, 830 in terms of capital from the bank, 300K from the bank, and 530 plus from yourself. So if you do the math, you can figure out a path to get there. I think 1 million sounds like a lot of money. It is a lot. But if you steadily build there over a decade, whether you choose to use financing, whether you choose to do it out of your own cash, you can get there using a portfolio of products, right? Of course, you will use ASB, and of course, if you choose to invest elsewhere, maybe think about StashAway as well. So, you work very hard, and your money can work very hard alongside you. And then I enjoyed using Nano Banana so well that I went overboard. Playing with the Chuchu Chichi. Anyway, to continue this comic series, subscribe to my newsletter, and then I'll show you the adventures of this lovely couple. Yeah, so I also wanted to give you a little bit of a perspective of why international investing is something you should really consider, and which is why we crafted the Shariah Global Portfolios the way we did. If you look big picture, actually Malaysia is a very small part of the global picture. We took this Vanguard Total World Stock Market Index, and it's a very small part. Malaysia's market cap is very small compared to other huge equity markets around the world. So you should also diversify away from Malaysia. As people who study overseas, as people who buy overseas products, as people who travel, as people who send your kids overseas, investing overseas shouldn't be such a stretch of the imagination. And ultimately, when you do gain perspective overseas, you will see that while we all love Malaysia and all of those things, it's a very small part of the world. So not just that, the local Shariah investment space also is allocating towards the international markets, and I think more people should. In fact, I think 30%, is a very respectable amount in terms of the industry's allocation to overseas markets. But as a private individual, you can always do more. You can always choose to invest more. I use the EPF's numbers here because they're a little bit more public in terms of disclosure, but they have a 37 as of 2024. They have a 37% asset allocation to international securities holdings, and obviously that is more equity weighted. So that 37% contributed 50% to their investment gains. This is by design. This is not because international is just naturally better. It's just more that the allocation is towards more equities, towards more risk-taking assets. So the allocation actually does give you outsized returns. And then I think they have a very active approach towards investing more overseas with the limitations that they have. So I also think that there's a myth that Shariah returns are less than conventional. I don't know where that myth came from actually. Maybe it's because I think there was a time that EPF returns the Shariah one was less than conventional. So when I speak to customers, they think that Shariah returns are kind of less. But actually when we look at data, actually it's on par. This is global equities. Global equities are on par, 3 years annualized. And then also, we actually saw a outperformance in terms of the Shariah S&P ETF performance versus conventional. Over a 10-year period, the Shariah version performed 48% better. And that's proof that there is a God, basically. I think this is clear, right? No, I think, jokes aside, if you think about the Shariah, the Shariah layer, basically, when you think about investing, it's one more parameter or factor when it comes to investing. So when you take out certain industries and when you take out companies that are highly levered, you do get some outperformance. So Shariah investing also has some overlap with ESG investing. And if you do weed out some of these industries and some of these more levered companies with a lot of borrowings, you do get outperformance. So I think this myth about Shariah underperformance is something that you should get rid of in your mind, because Shariah investing can be on par or even better than conventional investing. So I wanted to also leave you with this offer. If you start investing today, you can see the details. If you invest a certain amount, we waive our management fees. So it's not just ASB that can waive the fees. We can waive also. We can waive the fees. So if you invest from 1 to 5K, you get 6 months off, and so on and so forth lah. Hey, the campaign period is about to end very soon, 31st October. Okay, maybe we'll extend lah, but so far my marketing team said 31st October only. Okay, so take a photo, and whether you take advantage of this or not, do consider our Shariah Global investing portfolios. And thank you so much for coming out tonight. Let's have some food. Thank you.